Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
Good day and welcome back to Navigating Retirement. I'm your host, Rick Durkee. Today's topic is going to be shaken up a little bit here. We're going to talk a little bit about some Q&A. We've had several questions come in over the last several months, and we do field those questions. We encourage your questions to come in during the show or anytime that you would like to find out information from the Coastal Financial Planning Group. But we've been banking those questions, and we thought they might be useful for us to go over those with you today and share that information with our faithful listeners and watchers here on Navigating Retirement. By the way, if you have a question, here's the easy way for you to send it to us. You can send it to Rick Durkee. That's Rick, RickDurkee, at cfpgroup.biz. I'll do my best to answer it in a future episode of Navigating Retirement. This retirement planning video, as of all of our videos, are meant to be shared with anyone who find it helpful. If you think that your retirement-minded friends or family might be interested in watching this video, feel free to share it with them. Don't forget to copy down or write the link to the video and send it to them also. There's several links below the show notes section with valuable information you can use for your retirement journey. So are you ready to hear some of these questions that have been piling into us here at the Coastal Financial Planning Group? Let's get started. Our first question comes from a couple that are concerned about their Social Security. Now, their concern is that they heard that the Social Security system will go broke in the next 10 years. And they wanted to know, is that true? And what kind of circumvention planning should we do to avoid that potential issue? Well, first of all, Social Security would have a hard time going totally broke. The system is set up so that people from earlier years, as they contribute into the system during their working years, they'll fund the current year's recipients of the benefits. Now, the system is also set up that if any changes are done to the Social Security system, the payouts, things like that, Congress has to vote on that. Now, if you were voting for your congressman and you were in retirement years, would you vote for a congressman that voted for the Social Security system to go broke? I don't think so. Now, they have been kicking the can down the road, and there have been some changes announced just recently as far as people that fund into the system, how long they're going to have to fund in. And also we see full retirement ages moving out for future generations when you can pick up your full benefits from the Social Security system. I don't think we need to worry, but here's the point. If you think you should be concerned about this, or you're dependent on Social Security for your retirement income plan, remember, Social Security was never meant to be all of your income in retirement. You need to do some planning on your own. You need to set up some other accounts and create income streams with other things to supplement your Social Security. Social Security is important, and you need to make sure it's an integral plan in your income plan for retirement. You also need to make sure that it's integrated in with your other sources of retirement income too, so that you're tax managing your income plan. Here's our second question. I'm 63 years old and my company just let me go. Should I start taking my Social Security now or wait until I reach my full retirement age of 66? Now, you can start taking Social Security at 62 years old. You can take it before then if there's disability involved. This fellow is 63 years old and he has an option to be able to take his Social Security at 62, but now he's lost his job. So he's thinking about waiting till his full retirement age or moving on until perhaps as long as 70. He can wait till 70 years old. Okay. The next question is, do I need to take an RMD this year? I didn't need to take one last year. Yes, the Secure Act allowed you to be able to pass on your required minimum distribution in 2020. However, this year, 2021, everyone needs to take their required minimum distribution. And I would like to help you understand that there are a lot of rules with required minimum distributions that you need to be aware of as to how much you take and when you take those distributions. We'll have a special episode of navigating retirement coming up soon with that particular topic discussed. I think the stock market is way too high and I'm afraid of it making a big correction. What should I do? Well, the stock market does go in two directions. Sometimes it's flat, but it does go up and it does go down. When the stock market is poised as it is right now, it is high, and we are concerned about it possibly going down. We have options to be able to defensively manage our assets and make sure that we're protected with an income allocation plan. I'm going to give you an opportunity right here to be able to request a copy of the book, Income Allocation. It'll teach you how you protect a certain amount of your assets for income. And then if the stock market does go down, those assets are protected. They're still going to provide your income that you need in retirement. And the remainder of those assets are going to be able to be positioned in defensively managed investments so that if the market does go down, you'll be protected. You can also take some of those assets that are built for growth and long-term and allow those to grow over a longer period of time and put those at higher risk if you would like to. And we will have an upcoming Navigating Retirement show about how you should properly allocate your risk in your investment portfolio. Our fifth question and our last question is it important to have a new Roth IRA account each time you do a Roth IRA conversion, considering the 5-year rule to avoid the mix-up when it's time to start withdrawing from the account? Wow, that's a confusing question in its own. So let me unwind that question a little bit. The Roth IRA, when you set up a new Roth IRA account, it has to be left in that account for 5 years before you take it out. Now, there's some nuances to that rule. If your Roth IRA is in a 401k plan, then you set up another Roth account, like say outside of your 401k, then that new Roth, which is a Roth IRA outside of your 401k plan, is going to have to wait. You're going to have to wait now an additional 5 years before you take money out of either of those two accounts. So this can be confusing. It's definitely something that you should have built into your retirement account and your retirement income, because Roth IRAs do grow income tax free. You can supplement your income in retirement and also provide tax-free distributions in your retirement years through a Roth account. But the bottom line here is you start a Roth, you need to wait 5 years before you take money out of that account, or you'll be subject to a 10% penalty. Now, I'm sure this has generated some other questions about retirement planning. And you might not know where to turn, or maybe your current wealth management firm doesn't take time to understand your needs. Our team of professionals here at the Coastal Financial Planning Group can help you create a tailored retirement income plan. We'll give you the time and explain to you what you might need to learn so that you can make decisions that are in your best interest. We'll help you. We've got the expertise. We'll give you the personal attention that you need to create your retirement income plan. Start planning for your future today with a complimentary 3-step review. Call 843-735-5065.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Third-party rankings and recognition from rating services and publications do not guarantee future investment success. Working with a highly rated advisor also does not ensure that a client or prospect will experience a higher level of performance. These ratings should not be viewed as an endorsement of the advisor by any client and do not represent any specific client's evaluation. Generally, ratings, rankings, and recognition are based on information provided by the advisor. Please contact the advisor for more information regarding how these rankings and ratings were formulated.